sure.
Hi everyone, good afternoon to us all, and I say a very big welcome to our session today. Um, say my greetings to everyone, and I trust we are all doing well. We're also in good shape. Thanks for taking time to make it into the session today. So that I'm sure we are all in. Please just type hi in the chat box so that I'm sure we are all together before we get started. All right, perfect. Okay, thanks to everyone that were able to get their tax done, the tax that was given in the previous session, and they're able to submit that. Now, before we go ahead, let's just have like few minutes to have a chat. How was our last task, right? And if you have any question, I think we can just discuss that. So, any question, any clarification on what we've done so far? For now, we've completed our financial statement, excluding, I think this should be, let me just put this in one color. So excluding our interest income, which we might come back to. We've completed our balance sheet, which is also looking good. Okay, and we've also completed our cash flow statement. So let me give us time. So if you prefer to put on your mic, I think you can just click on your hand too, and I will grant you permission to unmute your mic if that will work. Just raise your hand if you prefer to talk or something. Okay, so can you please explain the loan period flag and how the period can ties with it? Oh, perfect. I love that. Very good question. So now let me go straight to our calculation and let's see what we did there. Very good points. Also expecting us to ask that. Okay. Let me do it in a blank worksheet, right? I'm just trying to, let me format this, my worksheets. Okay. Now, in modeling, there's something we call flag. In fact, there's a particular name for it. Um, we call it a logical. We call it logical function. Logical function in Excel, right? I think there's also this other name under which we put this thing. Okay. Sure. The name is not coming to my brain now. But if I remember that, I will let you guys know. So we have something we call logical function in Excel. And basically, what logical function, what they help us do is they help us to test different conditions if they are met. Right? Now, on under logical function, we have something we call it, some people call it flag. Some people call it flag, right? And some of us call it mask, right? But over time, I've realized that in bigger markets, they only stick to flag. So by the time you are hearing someone saying, "Oh, uh, try and create a mask for this thing," or "try and create a flag for it," they are still saying the same thing, right? Flag And the reason why some people just prefer to separate it is because, as I said, both of them, they are testing a condition and they are still the same thing. Now, let's take a look at it. As I said, logical functions, they are just testing a condition. If conditions are met and if not. And in using this logical function, right, we kind of use a word term flag or mask. And for us to use this flag and mask, we make use of our basic mathematical logical sign that we use, right? I think the first ones, I think we said we have 6 in our mathematics, and we use this logical sign to test different conditions. And the first one, which I'm sure you know, we have greater than, we have lesser than, okay? We have equal to. Now, what's the next one that we have? Anyone want to help out? We have equal to or greater than, right? Then we have lesser than or equal to. Can anyone help me with the last one? Can anyone help me with the last one? Let me check if you guys still remember what we did back in our primary school days. Anyone? Okay, yeah, perfect. So greater than or that greater than or equal to or what? How do we even say that? Right? Not greater than or not less than, something like that. But basically, these are more like the 6 logical tools, logical signs that we use when we are dealing with logical function in Excel. So, which means there's no way you will learn logical function in Excel that you will not learn this guy called flag and this sign. Now, let's tie it to a reasonable thing so that we see, as we said, all we are just trying to do is to what? To test. We are testing if certain conditions are met. Right? In testing that, we make use of this 6 logical sign in doing that. Let me give you a good example. So let's assume I have January, right? January. Let me look for a very relatable. Okay, so let's assume I have period 1, 2, 3, 4, 5. Okay, okay, 5, which is the period. Okay, and I want to check. So let's assume I have input of, let's say, 4. So let me call this our flag. Let's assume I have 4 here. And all I want to do is I want to check, right? So I'll type equal to the period that I have here, which is the 1, 2, 3, 4, 5, right? Are you equal to, which of them is equal to this same period that I have imputed here? Okay. If I press enter, anytime you use a Boolean, okay, yeah, I've remember. So we call it Boolean logic. Boolean logic. Let me remember the the spelling. I think I've remember it now. Boolean Or can anyone help me with the spelling? I'm sure if you have anyone that did um, mathematics or something, they will remember. We call it Boolean logic or something like that. Exactly. Thank you. Yes. So Boolean, exactly. Boolean, we call it Boolean logic or Boolean function or that ways, right? Hen, exactly. That's what we call it. So, and when you are talking about Boolean logic, it's basically what? Anything equal to 1 or 0. And I think under that, they were able to create some logical function in Excel just to be able to test certain conditions. So in Excel, right, whenever you see, anytime you see true in Excel is basically the same thing as 1. And anytime you see false in Excel is the same thing as 0. So in Excel, true and false are not text. They are values, right? And for you to know, let's assume I have I have like a 500 that I type in here. If I come into my Excel and I multiply true that remember I type this as a text, right? And I type equal to this 500, right? Multiply by true. What do you think I'm going to get? It's as good as if I'm multiplying it by 1. I'm going to get 500. Now I multiply it by false is as good as I'm multiplying it by 0. Just the same thing as if I'm multiplying it by what? By 1. So 500 multiplied by 1 will give me it's as good as multiplied by 1. 500 multiplied by true in Excel, true is a value, is not a text because is a what? Is a Boolean uh, logic sign, right? So that you know. So you can see now. So I'm testing 1. The list of period here, this guy, are you equal to the same input that I have here? Basically, no. So if I copy this to the right, if I get here, you see, because this is equal to the 4, that means is what is testing it. It's true. That condition is being met here. And just for people to be able to see it, they tend to just multiply it by 1 so that it's a bit clearer to see what is going on. So let me format that so that it shows properly. So that it's easy to see that yes, in this period, this is what we have. Okay, so basically what we've done is what we've tested the equal sign to be able to test that logic if it is true. Now, some people will just call this flag, and the reason why they will call this flag is because in a series of conditions that you are testing, you only need one to be true, while others will be false. Right? But people say, oh, so for mask, they say, oh, for mask, you need to have a multiple condition being met. That's just the reason. But most times people it's better to just stick to one and say, oh, not flag is flag. There's no story of, oh, this one is mask, this one is flag. Just keep it like that. But so that you know, because you hear someone saying flag, yes, it's still the same thing. Let's hear someone saying mask, it's still the same thing. Now, let's test it again. Let's test it again. Let's now assume that what I want to test in this second part is I want to see period that are lesser or equal to 4. So basically, you are saying, yes, 1, truly you are lesser than 4. 2, you are lesser than 4. 3, you are lesser than 4. And so let's try it first. So equal to, right? My period that I have here, are you lesser than what? Are you lesser than 4? So I'll keep the 4 constant. Set. I multiply by 1. Now, because at times you don't want to type some values in your formula. So there's a function we call n in Excel. So it just converts a number date to true. So you can see, let me zoom out. So yeah, convert non-number value to a number, date to serial numbers, true to 1, anything else to 0. So instead of typing the 1, you can just type the n, close the bracket. So that just automatically helps us keep that. So you can see So we are basically saying, are you lesser than what? Are you lesser than 4? Okay. So which is, oh, yes, this is really true. They are lesser than 4. But if you want to twist it a bit, right? If you say, oh, you know what? It must be lesser than. So let me just copy this. So we're saying this period, it must either be lesser than or equal to. So if I copy that across, you see now that here we are having that same condition being met in that particular period. Okay, and if I decide to change this to 3, automatically do what? Supposed to be picking this one. Okay, yeah. So if I change this to 3, you see now that it automatically switch. If I change it to 2, the condition automatically. So we use this to kind of build in some conditions and also to reduce the use of our if functions, right? And yeah, and to also make your formula neat and concise. So instead of using if this period is equal, just use the flag as directly, and you can multiply anything by that. So if you go back to our loan calculations, right? If you go back to our loan calculation, maybe we should quickly do this together. Okay, so now at least we have our basic information regarding our debt. We have the new drawdown, right? We have the interest expense payment, and then we have our repayment period over 4 years. Over 4 years. Now, just for basic understanding, when it comes to debt and loan, let me remind us what we did somewhere up here when we were discussing our inflation. Okay, yes, exactly. Now, let's look at our pricing. When we built in our pricing, we have our base price, right? And we said, okay, we made provision for like a management expected increment. Okay, and we said we need to now factor in the time value of money, and then we now apply our what? Inflate uh, our inflation factor. We apply that on the pricing. So we used to say, oh, the nominal then to the real to nominal, right? For us to get this, the whole effect is we are making provision for time value of money, which I'm sure you understand that concept now. Please, in case you've forgotten, you can still go back to the recording. You always need it, right? Anytime, any day. Now, you see that concept is the same concept that is being applied when you are also trying to get debt, get a loan. Remember, your own income is someone else's expense. Someone else's expense is your own what? Is your own income. And as such, everyone is trying to safeguard themselves against the time value of money. Okay? Now, keeping it simple, every other thing being equal, if I come and meet you and I ask and I'm telling you that, oh, please, can you give me a loan of 100K? You're using USD currency. And and they're telling me that, oh, you know what, I will give you back this money in the next 4 years. Basic thing is what? Equal to, and let me do it somewhere here. So that's basically what? Basically, you are saying equal to this 100K divided by 4, right? In common sense, that's the amount you need to pay me back. So let me put that here, this minus the 25. And you expect that to be fully what? To be fully paid over 4 years, which you can say that by the end of year 4, we've truly repaid it. Okay, are we together? Please, if you have any question, just ask. Now, because of my left to right consistency, and I want my model to also be flexible. Normally I would have just deleted the one in year 4, but that won't be a good best practice of our model build, right? Which means I need to get something to restrict this guy. I need to get something to restrict it. And that is where our logical condition comes into play. So I need to create a flag which just tests equal to the period that I have here, which is our period count. 1, 2, 3. Okay, I think we recreated one down here. It's equal to previous period plus 1. Just need that 1, 2, 3, 4, 5 counts. That will be now equal to this period. Are you lesser than or equal to what? The loan period count, which I said you can multiply by 1 or just use the hen function. So you can see, so this counts by the end of year 4 at least. And I can multiply this value. I can multiply by what? Multiply by that loan period flag across. So keeping everything constant is basically saying, give me 100k USD today, and I will pay you over the next 5 years. Not that I will pay you in year 4. I will pay you over, right? So there's, oh, I'm going to pay you in year 4. That's more like a bullet. So you are giving me the whole repayment at once again. But no, I'll pay you over 4 years. So basically, I'm dividing this by 4. Simple. So which means at the end of the period, you still expect my my repayment. So if I do like a summation here, you expect it to still be equal to what the amount that has been taken equally. Now, but because of time value of money, right? This same 100k that you are going to spread and repay back over 4 years might not have the same purchasing power again. So as such, the person that is giving you the loan also needs to be able to get what? To get that inflationary value of the repayment you are going to make. And that's where interest rate comes into play. So just, you see, the same way we are building the revenue, right? Looking at our pricing, and we are multiplying that by the inflationary index. Is the same way you also look at it from the angle of the expense. So now the interest rates also now depend on what's going on in the markets, benchmark, monetary rate, and all those things. So because of that, this person giving you that money also needs to be able to safeguard the purchasing power, the purchasing value of that money by the time you are repaying, because what 25k we buy in year 1, definitely you need more to be able to buy that same thing in year 4. Time value of money. As I said, we've taken our time to explain that. As such, so this guy now need to charge this interest expense. So that will be equal to, can use my beginning balance plus my new debt, all right, multiply by interest rate. Some people use ending balance, but to avoid circularity, it's just better let's use beginning balance and the new debt for now, right? Okay, so which means this is the interest gain that this person will get. Okay, now because we are going to calculate this interest expense, we cannot, this interest element has already been included in the way you are going to make that repayment. So that's why we call it amortized repayment. Because the truth is, it's not as if you are paying 25, right? So if you look at it, you are paying 25 here, you are paying 10 here. That's almost like 35. Okay. The following year, You are paying 25, you are still paying additional 75k. That's really too much, because if you look at the total debt, let me see. Let me put it here. So if you look at total debt service, right? That's what we call total debt service. The total debt service is basically your what? That will be your repayment, right? Plus, let me put this interest expense in negative as well. So basically, this is 35. And if I sum this up, so look at it. So you are taking a loan of 100k and you are using it to pay, 125k over the 4-year period. Okay. Now, because of the variation, you know what the person giving you loan also want to do? They want to make sure they collect their interest quickly, which is more like their own real gain, right? And a bit slow down the repayment. But let's see how that works. So now, instead of doing the equal repayment, it also depends on how so there are different agreements when it comes to loan. Loan debt modeling is a complete thing on its own when it comes to model build. Now, for us to calculate our principal repayment, we have a formula we use which we call PMT in Excel. So if you use it on the equal repayment, that is also fine. But we use PMT because we are amortizing it. And first thing PMT is asking for is our rate, so which is our interest rate, number of repayment, which is over 4 years, and our present value is the total amount we are getting today, close the bracket. So which means every year we need to pay 31,547. Now, if I multiply this 31,547, multiply it by 4, that's around 126. Okay, that's around 126. Now, let's look at it. Now, basically, this 31,546 is inclusive of both the principal repayment and the interest element of it. So this repayment that we are getting, basically what that PMT is now telling that, based on amortizing it, this is the amount you are going to pay every year, as against the 25k that was 100k divided by 4, which was 25k. Now you are going to be paying 31,547 because of the interest element that has been added to the principal. Okay, now to now see that would be equal to this my repayment, which I'm going to keep constant. As I said, that's the expected amount you need to pay. Now minus, remember I said it has added the interest element, but now we've calculated our interest elements out here, right? So I'm just going to deduct the 10 million, the 10k, which is the interest we've calculated. Remember, it's in positive, so that's why. So if I press enter, it's going to, so we are paying the principal repayments of 21,547 and interest of 10. So by the time you look at the total, it's still giving us that 31,547. So if I copy this across, right, it's showing that after our loan has been fully repaid, our interest is still, we are still saying we are still repaying after the debt has been fully repaid. So as such, we just need to multiply this guy. I'll put them in brackets and multiply by my words, by my flag that we've created. I'll copy that to the right. So you can see if you come down here, the total debt service is equal. But you know what they are trying to do? They make sure that they do what? They collect the interest expense quickly. So you can see that the interest expense is reducing and the principal repayment is what is increasing. And it's just because of that concept of time value of money. So they want to make sure they quickly collect their gain, right? And they leave out this principal repayment. Why? Yes, truly, it is still the same total debt service, but they make sure they've collected their interest, which is their own time value of money benefits quickly and low low principal at first, and then it increase as you try to repay. And one good thing about this flag is if you decide to change our loan period to 3 years, right? Automatically your schedule will do what? We incorporate everything. If you decide to increase it to 5 years, it automatically help you in doing that repayment fully without overpaying it. So let me put that back. So is that clear? Is that clear? Is that clear? Any question regarding that? Or any other question? Any other question? Any other question? So when it comes to debt, so you can see a debt of 100k, because of the interest element, you are using it to pay what? You're using it to pay 126 USD over the period. Okay, any other question? Any other question? Any other question? Now, for interest income, most times for a typical startup, we tend not to model interest income. But at times, if the need be, we can add interest income. Basically, you are just taking their cash balance and you're multiplying by the deposit rate, because you assume they will be putting their money in the bank, and that will definitely generate some interest income. But for now, let's remove that from this our model, right? We just assuming that's not their main focus for now. They're just a startup. So then let me go and remove it from my cash flow. Let me delete it from my cash flow. Everything is good, right? So now, by the time we are done with this, yes, we are closer to finishing up our model. But as I said, when you finish building your model, you need to take a sit back. Take a sit back and look through your financial statements. Make sense of it, right? Criticize what you've done, criticize your own work, look at it from the perspective of a reviewer. Okay, so now let's look at this model carefully. So we have our sales kind of looking good. Look at the revenue growth. Revenue growth is fine. Cost of sales, look at our cost of sales margin. This should be margin, not margin. Cost of sales margin. Our cost of sales margin, I think, is kind of constant, right? It's still giving a good range. So if you look at your cost of sales margin and you're seeing like something like a zigzag, you need to check and review what's going on now. Gross profit margin. Gross profit margin, I think, is still fine, even though I think it's reduced from year 2 to year 3. I can say maybe because that will likely be inflationary effect. Then that's our gross profit, right? Then we also look at our SG&A. At times you expect that to a bit reduce as the period go on. Then our EBITDA margin, which is where you also need to take notes. If you see like maybe irregular fall or irregular growth, then definitely you need to check and look at what is going on there, right? So question your own work, do like proper self-review. Operating margin, okay, is growing, which is also good. Net profit margin, loss in year 1, year 2, then year 3, pick things up like that. Okay, we then go to our balance sheet. This is also very, very key. Now, please always keep in mind that presentation is very, very good. I saw some of you by the time you submitted your model, let me give you a good example. I saw someone model and you can see gap on their hand. It was now looking like this. Please, as I said, your model is also a presentation. So you must always create it in such a way that it is readable. Even if you decide to print it out, okay, I think we didn't set this as a printable format, right? So if they print it out, let me quickly do it. Let me see if I can do that. Go to my page layout. right? Click this and set it to landscape, fit to, and click on my OK. So if I put this in a printable format, it is readable. You can see that it is readable. If there are unnecessary space, just try and remove them. Unnecessary space that might not make it properly readable. Just find a way to do what, reduce unnecessary column, reduce unnecessary row that you did not use. You can even try to remove some. So by the time put it in a printable, I want them to be able to see it like this, so you can see. So there are some I know most times when they want to also do like a proper review, they just tend to print out the document so that they can sit down and criticize everything from the output angle. Right, so this is very, very important. Presentation, how you present it, how you set up your workbook, is also part of the learnings. As I said, as a modeler, you wear so many caps on your head. Okay, so you look at that. We go to the balance sheet, right? If you feel maybe it's all this unnecessary, this space that we left here, right, might not be needed at times. Let me even give you a good example. For example, my total asset, I can just I don't need this whole story thing. I can just go straight to my total assets because of presentation sake, right? My liabilities, I can just remove the segmentation of current and non-current and just put everything like this. As I said, it's all because of presentation. So just remove unnecessary structure. If it's not needed, then let's get rid of it. So funny thing how it tends to work. I think we can leave a space for this. Okay. And by the time I also print, I'm not sure we set this as a printable. So page layout, click on my drop down icon. So which is what I'm doing now is what we ought to have done as we were setting up our document. So if I print this out, it's easy to also see the balance sheet, and just remove unnecessary noise, remove unnecessary space. Let it be properly readable. And I think most times you can also add like a ratios to our balance sheet. Okay, and one of the ratios, let me look at how we created this. So key performance indicator. So we can also do the same thing for balance sheets. So balance sheet here, we can have our return on assets, right? We have our return on assets, return on equity, return on capital employed, right? So any other one, we can always add them here. So that by the time they print it out, as I said, it's always read like a book, and they can review. They look at the ratios here, the layout of everything at once if they print it out. And these are part of what makes you a good modeler. When you build your model, make sure it is readable, put the structure properly, right? The segmentation, if you see that they just have like one line item, don't just try and put them together. The highest thing is maybe you just put like a space, so that at least it shows that okay, this guy is more like a long long part of it and not like the current. So as I said, just make it readable, very professional at it. The choice of your color as well. And we also go to our cash flow. I think our cash flow is a bit direct. Okay. And also, please, when you are building your model, right? When you are building, because I observe some of you still make that error. I just had to overlook it. I actually rejected some people because of it. So one is go to your file tab. Go to your file tab when you finish building your model, or while you are building it. Go straight to info and other info. Check here. You see this related documents. If your documents are linked to external file, you will see it here. That is not a good best practice of model build. right? So if your model, if your document has external link, it will show up here. I'm sure some of you still go and check. If you go to your Excel now and you check it, right? Just go to your file tab, go to your info, and see below where you have related documents. I'm sure you still see that external link of the 3 statements that we created that you imported here. So please always check that. It's not a good practice to be having external link in your model build, right? Even if you need to link it to external, make sure you break those links before you finish up your model. Okay, so now our balance sheet, let's look at our balance sheet. Our property, plant and equipment, yes, it's looking good. As I said, some people, so let me give you that good example. I think, where do we have our maintainable capex? Okay, yeah, that we created. So let me delete this and let me come back to my balance sheet. So now when you see something like this, it's definitely, it should call your attention to something. Okay, so I think we can even add revenue. Let's call this asset. Let's call it asset turnover. Then we also have PPE turnover. So you see something like this, that your assets, they are decreasing. Okay, but here your revenue keep increasing. You expect that property PPE to be able to drive our revenue, but here you are seeing something like this. Then you now go to the cash flow and you now realize that in the cash flow, you're saying you're going to only invest in capex in year 1 and no further maintainable or replaceable capex in other years. Those are the kind of things investors look out for. To tell you that no, you are overstating your what? You are overstating your cash. So let me go back and let me go and put what we had here. I think it was 85. If I'm correct, by the way. Right, and that puts your assets in a what? In a good state. We look at our inventory, a good range. Should not expect any unnecessary jump. Your trade receivables, kind of look at it. Is it realistic to my revenue? Right. So below you can even have your net working capital metric. So maybe receivables, 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 receivables are percent of revenue. So that also kind of give you like a trend for you to see if it's making sense or not. Looking at the cash, this cash seems to be high, right? But we also now need to look at the nature of the business. So we look at that when we get to our cash flow. Look at your long-term borrowing. You said the debt will be for 4 years. So which means you do not expect to see the ending balance in year 4, because that you would have paid that debt at the end of your reporting date. So you look at that. Your trade payables, look at it. Tax payable, because you pay tax the following period. For example, January to December, the tax you need to pay in that year will not be repaid in that year. To be repaid in the following year. So you look at that, everything is good. You look at your equity, look at your retained earnings, and make sure that your balance sheet is balanced. Right, I think I will allow you to go ahead and build out these other ratios. We go to our cash flow and we look at what's happening in the cash flow. Now, cash flow from operations, let's look at it. Right, we've seen our cash flow from operation. Let's look at operating profits, make sure that they are coming from the right place. Depreciation added back, changes in net working capital in year 1 is a bit high, right? And we understand we're just starting up, trying to get those cash to run the business. Another period you look at, okay, they have a proper trend. If not, if you are seeing like a significant difference in your changes in net working capital, then you need to review your model and see what is going on, what is causing that irregularity. Right, year 1 we can say, because year 1 is just the first year period, so they need a lot of cash to do us to get the business going. All right, look at your capex, make sure at least there's like investment in capex every year. Equity flow, they coming in year one, sustainable. Debts coming in. Principal repayments, you are repaying it over 4 years. Also check that to be sure that yes, this guy adds up to 100 to the total debt inflow. So if I sum all my principal repayments, so that should give me 100k. So check that is correct. This is the interest element. This is the dividend payout. So check, make sure you are not paying the dividends when the business is making losses. Okay, or when the business does not even have cash, you are still paying dividends. That will not make sense. Now, if we look at our ending cash balance, it looks really high. Okay, and now it's now decreasing over the period. So one is we can tell a good story that, oh, you know what, we need this enough cash because of year 2, year 3, year 4, where we will have slightly low, the cash will be going to generate negative cash in those period, so that the cash that we have from that we raise from period 1 will be sustainable. But let's look at each segmentation of this funding. Net cash from operations is very key, because if a business fails to generate cash from operations, then it becomes a problem. So in other words, this net cash flow from operation, let's even say from year 2 to year 5, gives the true picture of what the business cash ought to look like. But now, because we have some repayments of the loan that we need to make, right? It becomes, we need to think twice about this. So if the equity will be giving us 100, do we really need up to this 100k? Right? Because when the business is starting, you try as much as possible not to put the business under stress of debt repayment. And that's where the concept of sensitivity and scenario comes into play. Okay? Now, what if we decide that, you know what, we don't want to get up to this debt of 100k, since because of the high interest. So we usually encourage that a startup business should try as much as possible to limit their what debt they can take, especially when the business is in a growing phase. So we're saying, what if maybe we don't even need up to this 250? Maybe we only need 200, right? So if we change, so if I reduce this to 200, right, and equity is giving us 150 already, and maybe our debt becomes 50, right? What will be the impact on our cash flow, on our, and also on our repayments? Now, the repayment becomes lower because of what? We are still generating cash from our business operations. And as such, maybe we actually don't need to even take the debt. Let's see. What if we decide not to take the debt? Let's make the debt 0. Or maybe make this 150. Right? I'll come to my cash flow. And you can see now that even without the debt, this business can sustain on its own with a good cash position. So as a financial modeler, you're also a financial advisor. As much as profitability is key, right? The whole reason why you are building it is to be able to do what? To still make sense of the cash efficiency. So which means if we remove the debt, the 150 we are going to raise from this equity, guys, will even be enough for us. Now, another thing is, oh, what if we now decide that, you know what, even equity, maybe later, we thought we might be able to get 150 from the equity guys. And what if the equity guys now said, oh, you know what, we can't give you up to that because of the riskiness of your business? What if equity becomes 100, right? What if equity becomes 100 and we still get a debt of 50? What will be the impact on our cash flow? The business will still be able to survive. As I said, all the main key thing is what? As long as we make sure we are generating cash from operations, right? And we make sure that the repayment of any debt you are taking is not overloading this cash from operations. So you can see in year one, so because of the what we got, right, the inflow now, and also because of capex that we need to incur, then in year two, the payments becomes higher than our operation cash. But in year three, slightly getting better. In year four, our cash from operation becomes higher. So these are also part of what the work you need to do as a modeler, because definitely it does not make sense for the business to just have excess cash just sitting down doing nothing. So if you look at the funding, or if you, it will be the other way around, where the business will need what? We need more cash to be raised in period one to cover up the negative cash that will be coming in other period, right? And that's how the concept of modeling works. So you don't just build it and think you are done and leave it here. No, that's when your second work comes into play. But now, please always remember, if the data has been given by the client, right, you cannot mess with the client's data. Let me put this back as 250, right? I think this is 150, and this one becomes what? 100. I think just 250, right? Yep. So now, don't tamper with client base assumptions, right? As much as you want to tell them, like, okay, maybe feel you don't need up to this, you don't need up to that, you don't need up to that. Instead of overriding their own, keep the client's data the way it is. Then you can now go ahead and create what we call scenario and sensitivity, which will be the next thing that we are going to do. So I'm going to duplicate this guy, and I'm going to call this guy scenario. Scenario. I'm going to call this guy scenario. Now, scenario in modeling is very, very key. So scenario sensitivity is almost the same thing. It's as if you are testing the impact of changes in a particular input on the model output. Okay, right? You are testing the changes in particular input on the overall outcome of the what of the model. Okay, now this is very, very key, especially when we are trying to also do, like, you want to find the viability of the business, and also maybe you just want to do like a little valuation. Okay, so now let's build in our first sensitivity, our first scenario. Our first scenario, right? Let me check this. So I'll call this 1.1. Let me copy this header here. Because by the time the model, right, gets to people that want to make use of it, they will also be asking different questions. And your own objective as a modeler is to be able to make sure that the model can answer any question that's being asked, right? So one, think so if you go to our input, let's come to our P and L first. What is the most, let me ask you guys, what is the most important input that drives our sales? Or should I say, what are the most important input components that is driving our sales? Quality and pricing. I agree with you. Okay. If I come to my input under my revenue, what's the main driver? So as much as we have our pricing, okay, and also have our forecast quantity, what is the key main driver? What is the main key drivers? What are the main key driver? For now, our pricing growth is 0. Okay, so now as I said, you can have now also try to, as much as you can, build scenario for almost everything. We always advise that make sure we build it around the core thing that will drive the main line item. Okay, so now we can create for pricing. Fine, that makes sense, right? Basically we are saying, no, base case, this will be the price, best case, this will be the price, worst case, this will be the price. Okay, now we also have like different type of, but for today we're just going to stick with this simple one. So let me bring it close to my input section and maybe change my color tab to a different color. Okay, so now firstly let's call this our pricing. Let's call this our pricing. And now we can create for each of the pricing, but for now let's go with our pricing growth factor and see. Let's see the reason why that drives it the most. So what I can do is I can I just want to see the impact. Let me bring my revenue here and bring my total sales here. If I decide that, oh, you know what, this is the pricing that we have, right? In year 3, what if we increase both products by 10%? Right? I think that is kind of easier to adjust. What if I say, oh, our revenue growth will fall by -5%? You can see the impact, right? So which means the pricing itself is very important. And in fact, that's all. In fact, that's very good. So this is what we are going to do. I'm going to do like an example for us, and I will leave you to do like this. Now use your own professional judgments to create different scenario, test them on your own. So basically, we are going to have, I'm going to call this. So let me set up my scenario. So I'll call this. Uh, so we're going to have our base case, right? Best case, best case. Then we're going to have our worst case, and maybe you can have other cases. Okay, so I'm going to do like 2 types for us, and I will leave you to also go ahead and use your own understanding of the business to build different scenario. And I'm going to call this our pricing. But so let me just call this, everything under here should be for revenue, things that drives revenue. So the first one will be the pricing. So I'll call this one product pricing, product price. Okay. So list of this our case. So it's good. We just create something here. Well, let's delete that, by the way, because we are going to need this. So what I'm going to do is I'll come to my input here. Should we do it like that? Should we do it like this? Okay, let me just type it like this. Come here. Let me change this to scenarios. Right, and here let me call this guy our scenario list, so that we have the unique thing across both. I'll put that here. So this is my list. Okay. Now the first one, so everything will be linked to the list that we've created up here. So we don't need to be typing it again. Okay. Now these are my lists. And my product pricing, I think for now we are only using a base, we're using a base value. Okay. We're using a base value. So I think we can just, so because that is just only a base value, we can keep that. So let me just, okay, because now we have 2 products, right? So this one will be for product 1. product pricing for, what's the name of our product one? So that's wheat bread. Wheat bread. Please take a look at it because you also need to recreate your own. Okay, so my product for wheat bread, I can put that here, which is my base case. So these are more for a single input cell, right? Maybe base case, you can use like a growth thing. It depends on you. So maybe I'll call this like my let's call this growth factor. Growth factor. And basically what we are trying to do is you don't want them to add code the typing. So we just have only the base and maybe the rest. So when you are building it, you make sure let me see, we have an percent. Okay. What you are trying to do is you just make sure it's kind of very easier for your users to do that update. Okay. So maybe this one will be, maybe best case will be plus 5%. I always like to even format this so that the percents, anything we are deduct, so the positive one, just put like a plus sign in front of it, plus, then automatically this is like a minus. So that's basically, I'm just format. So plus 5. Worst case should be maybe minus 10. Okay. Other cases should be maybe minus 2, maybe minus 2. Right. So what I'm saying is, I'm just saying base case, right? Multiply by, open my bracket, 1 plus this guy, the growth factor. So everything will be referencing to the base case for the adjustments. Okay. So you can see that. So, but because I'm going to copy this formula and use it for the others, I just have to do it. I'll just remove the cell lock for the base. So by the time I copy it downward, it will automatically move. Okay. So you can do it like this. Just make the then we remove this so that it does not show as input. I hope we get that. And if you would prefer that, oh, you know what, you just want them to put the value directly. But most time I always prefer just, let's have this input. Let's have this as the input. Maybe put this in here so that's easy to read. So this is what they need to reduce that. Okay, this is our base case. Okay, our best case, maybe we should say best case should be maybe plus 5. Worst case should be maybe minus 10, right? Then you have your other case, maybe minus 2 or maybe minus 1 or 1. So it depends. You can have, that's why you can have multiple cases like that. Okay. Then we now have like so you can have like a multiple layer of scenario, right? And you can have a case where only one button just kind of drive every other scenario. Okay, so now this is what we are going to do in this one. One is we are going to have like a master scenario switch. Okay, but I think maybe we'll do that in the next session. So for now, each scenario has its own switch. So, and to do that, right, we need to create like a data validation. We need to create a data validation. So to create that, what I'm going to do is I will highlight this my case, highlight the list of my scenario, highlight it, come to my name box. I'm highlighting everything, come to my name box and call this scenario underscore list. So you need to remember the name, the way you've typed it, you can even copy it, scenario underscore list. So I think you can only use underscore in that naming convention. So I can paste that here so that I can remember that, so this range is what I've given this scenario list name. Okay. Right. And here, let's bring this here. Okay, I think let's bring this here. We can do the segmentation later. Then with this, I'll just create a data validation. So basically what I'm saying is base case is 1, best case is 2, worst case is 3, other case is 4. Right? So base case 1, best case 2, worst case 3, other case is 4. Okay, so now which means in this particular cell, so this will be my list of my cases, and now this will be my case switch, my scenario switch. So basically I'm saying if I type 1 here, Excel should give me what we have as base case. If I type 2, Excel should give me, well, let me put it here. Okay, so if I type 3, Excel should give me worst case data. If I type 4, Excel should give me other case data. I hope you understand that. So 1 best case, 2 best case, 1 base case, 2 best case, 3 worst case, 4 other cases. Okay, but now definitely I don't want my client to be typing 1, 2, 3 and all those things. So instead I want them to even, so we are still going, let's use drop down options. I think maybe next session we touch base on combo box. So now I'll go to my data validation, go to my data tab, and I have this guy called what if analysis. So I'll click on it and I'll click on my sorry, okay, we are going to do, that's another thing. So let me do that again. So while I'm still inside the same cell, right, I'll go to my data tab, and under my data tab I have this guy called data tools, and I'll click on data validation. I think yours, if you're using a smaller screen, you might have grouped them. So as long as you see it under this section of data tools, you just click on the options, then you will see this data validation. So once you click on this data validation, it's going to bring up the data validation button. You can see allow any value. So that's the default settings. So if you click on it, you will see different options. So we use this to kind of restrict some certain things you can type in a cell in Excel. Okay, so now we only need for a list. So I'll click on this list and it's going to ask me for the source. So if I click inside the source, I can now go ahead and highlight my scenario list. Now, because I've created a name range for them, it's going to bring out the name as against highlighting cell, I think this is cell D11 to D14, right? But because I've given it a name, it's just going to bring out the name for me, and I'll click on OK. So which means what I've done is I'm giving the grace. By the time they click inside there, instead of typing 1, they will just select the cases. So best case, base case, right? Worst case, then other cases. So it's easy for them to select, and because they might not understand what is 1, why they need to type 2, why they need to type 3. Okay. All right. So now I'll come in here. So what we want is we want this guy. So whenever they select base case here, right? Basically what we are telling Excel is it should give us what we have in the what? In the first case. Now, as I said, the reason why we've created this drop down option is to allow the clients, right? They can select base case without them having to be typing 1, 2, 3. They don't need that. Okay. So let me see somewhere, trying to see where we can create that. Okay. So here I can type equal to match what? You should match this base case, comma, you should match it in the list of my scenario list and give me the exact match, because we still need, you see, the figures we were typing initially, 1, 2, 3, and we still need that figures. We need those values, but we do not, client does not, it's not their own headache. Their own is to just select this case. But we now need to create a formula that will automatically be picking those 1. I'll be giving us this. Oh, this is 1, this is 2. So base case is 1, best case is 2, worst case is 3, other cases 4. So that's what this match function will help us do. So match this case, any case being selected in there, look for it in the list of the scenario that we have and give us the exact match, which is the 0, and click enter. So them, this is not their own This is, you should not tamper with this one. I think we have this formatting. Yes. So this is not their own edic. Oh, okay, this should be, I need this to be just like white or something. So this is, they don't need to bother about this. It's not their own edic, right? But we need this as our scenario selection. So I'll come in here, come into my revenue product price for wheat and type equal to index. Index. What is index asking for? It's asking for array. It's asking for array. And anytime you see array, basically mean the output of what you want. So I'll just highlight everything here, comma. What is my row number? So now my row number is that cell that contains the one which we use match to create. And I will log that and press enter. You can see. So anytime anything being selected in this box up here, so if it is base case, then it's also best case here. If it is worst case, it's also worst case here. And the number is the one doing the magic. Right? And for my model output too, you can just do the same thing, called to index, right? Highlight my array, which is the list of what I want as output, comma, and my selection will be the cell that contains the number, which I'm also going to keep constant, press enter. So which means this is what we now feed straight into our model. Okay, so which means to see the impact of this, I'll come to my input. Now this guy will no longer be an input. It will now be a call up, right? And I'll type equal to, I'll come to my scenario and link that to my current live case. So this is our current live case. Put the brackets around it, right? This is our current case. And I come to my input and type, so this will no longer be input. This will be a what? A call up from the scenario. Remember, this is what is feeding into our calculations, right? This is the 3.18. And where is this 3.18 coming from? Is coming from our input. So which means the scenario that we've created now has no impact yet until we now change. So instead of this becoming input, with that equal to, we now link that to the scenario output based on the selection and press enter. Okay, so now to even see that, let me bring, I can bring our, let's bring our revenue here. Let me just bring our revenue output here so that we can see that, right? So now, but my scenario, if I decide to go with my best case, I think base case, this is what we have in our base case, right? I can even do like, let me copy and paste this as value, right? I want to see the impact of, so this is, I call this base case, right? And this will be the current live case. And this will be like the difference, base case minus the current case. Okay, so if you decide to change this, so you know what, this becomes my best. Let's look at the best case. Okay, so I think it should be the live case minus the base case here. So which means with base case of just 5% increase in our price, in our base price, look at how much we are making in addition. Keeping every other thing constant. Remember, keeping every other thing constant. What if it's now on the worst case? What is going to happen? That means we are going to lose this amount of money, which is like a 10% decrease in our wheat bread price. What if other cases, which is just like a +1? This is how much we are getting. So this just help you to test what the impact of each of these cases will be on your what? On our model, on the model outcome, right? So now I'm going to call it a session here today, and what I want you to do is, now this is now more like a judgmental task for you to build, and also to uh sharpen your own skill when it comes to scenario build. Okay, for now, let's have this master scenario options. Okay, there are cases where, and that's what I was trying to say, where you have like multiple cases. For example, this is for wheat price, then the second one is multi-grain bread, right? Multi-grain. Now the other one is, which I'm saying is, you can have like a different scenario switch for each of them. Okay, I think maybe that's what we should even do. I'm just trying to uh, look through if we should do it like that. Yeah, I think it's better you start on the hard level at times. So basically what I'm saying is, for example, now for my multi-grain, I can decide that, you know what, let's go with the best case for multi-grain and go with the base case for wheat. Hope you are getting the logic. And the reason why most time we can have different scenario selection switch for each of them. So I can say, oh, well, because currently now this master switch is what is controlling everything. But I can get this case where you say, you know what? No, let's have our wheat price on the base case, and then have our what? Have our multi-grain. So what's our multi-grain? 1.95. Let's have our multi-grain on the worst case, right? And let's see what the impact would look like on our revenue. I hope you are getting the whole logic, right? So you can say, oh, no, let's for the wheat price, we want to have it on the best case, and let's have multi-grain on the worst case. So which means you have different what you need to get like a different controller for each of them. And then we're at the master level, you still now have another scenario selection that will be like, oh, if you select this scenario based on this base case one, that means that automatically be what? Product price with best case, multi-grain, worst case, and stuff like that. But I will leave that to you to use that as your own learning curve, right? This is now you are be professional at it. Look through your input, create as much scenario as you feel might impact the business as a whole. Remember the impact on revenue, cost, profitability, and also on cash, including the funding, right? Use that to create scenario. As I said, try to create scenario switch for each of them separately. Each of them separately, right? Just follow the same approach that I've used now and try to create for each of them separately. So maybe what will happen is this guy, we just need to create it for each of the debts separately, each of the scenarios separately, so that it's easy. Product price, so just want to go with base case. The products for multi-grain want to go with worst case, and they all have their scenario selection separately. I hope that is clear. Any question? Any question before we call it a session for today? Any question? Any clarification? Is the task clear? So you are the one drawing now, right? Try to create scenarios. Remember, when you create scenario, you need to link it back to the input. And I think the one I did, right, you can also add like a note so that they understand it's not an input directly from here. I can call this linked from scenario, right? We'll make it like a red color so that anyone going through this will understand that, okay, yes, this has changed from being an input to a what? To a linked from scenario. Okay? Okay? Okay. All right. Seems I've done a lot. And I think I was a bit faster, so I'm sure most of you might not have been able to follow through. So what I'll do, I'll share the recording once it's available so that you guys can use that to practice and use that to build your scenario. Okay? So please, any question, any clarification needed on what we've covered today? All right, so I'll see that as no questions. So thank you everyone for the session today. I will share the recording with us once it's available. Right. So thank you. Let everyone make sure we enjoy the rest of our weekend and be good. Thank you, everyone.